Imagine this, you wake up one morning and hear gold prices are up again, or crude prices have crashed overnight. Here is the surprising part. People don't just watch these prices changes, they actually trade them and even hedge their physical holdings. Using these prices movement that is called commodity trading. Why beginners get confused? Most new investors think that market is only about shares and stocks. But commodities like silver, crude oil, natural gas, copper, wheat, cotton, etc. are also traded just like stocks. And the first reaction is wait, can we trade gold and stocks? Do I need to buy a physical gold? Is this only for a big trader? Let's make it simple. What commodity trading actually means? Commodity trading means buying and selling raw material or natural products in the market. These include silver, gold, crude oil, natural gas, copper, wheat, cotton, and many more. So instead of trading companies' share, you can trade the price of real world good that the whole world depends on. In India, this mainly happens on multi-commodity exchange, that is MCX and NCDEX. Think of commodities like everyday essentials. Here is the easiest way to understand it. Stocks depend upon company performance. Commodity depend upon the world. Example, war. Crude oil price rise. Low rainfall, wheat price goes up. Inflation increase, gold becomes expensive. Commodity price move because of global demand and supply. That's what makes this market exciting. Why do people trade in commodities? First, protection against inflation. Gold often act as a safety shield when price rise everywhere. Second, diversification. You aren't putting all your money only in one stock. Third, global opportunities. Commodity price moves with international market. 4. High trading potential. Commodities like crude oil and gold show strong daily price movement. Simple example. Let's say gold is trading at 60,000 per 10 grams. You expect price to rise due to festive demand, so you enter a gold trade. A few days later, the price becomes 62,000. Your profit is equals to 2,000. But if gold falls to 58,000, then 2,000 becomes your loss. So just like stocks, buy low, sell high. Here only the asset is gold, not a company's share. Important reminder, commodity trading is a powerful but it also risky. So always learn and understand the market before jumping in. If you want to trade commodities with expert guidance, open an account with mastertrust. And if you found this video helpful, don't forget to subscribe for more simple finance explainers. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.